to be a member, and obviously if you're in this class today, you are, to get the $100 rate. Now, that rate is going to go up, unfortunately. You know, they have to raise the price to match everybody else. So come December the 15th, this price will go up to $149, even for those people who come in late. So if you are already a member and you're thinking about signing up for Segredo, I would take advantage of it between now and December 15. This way you lock in the $100 rate and you grandfathered in automatically at the $100 rate for the rest of your subscription life. So if you come in after December the 15th, regardless of the fact that you're a Shadow Trader member, you're going to pay the $149 rate. Okay, so that's the deal. So that promotion is going to end December 15th. So please make sure that you take advantage of it before December 15th. Okay, and if you're having problems signing up, somebody says somebody says they're having problems signing up, just email me. Anybody who needs help with signing up with Segredo right now, email me. If you've got in on the wrong subscription, you type the wrong URL, and you're paying the $149, you want to fix it, email me and this week, and I will get it sorted out. And my email address is melaniesuntrades@gmail.com. Okay, so I'm going to send my email to you all, melaniesuntrades@gmail.com. Okay, so now there's a couple of things. As you well know, that as I said last week, during the summer, things were a lot lighter, and we've been in this transition phase where we're being sort of restructuring things, and I've been waiting to hear from the decision makers at Shadow Traders. Even though I'm part of the furniture, I'm not really the decision maker, as to the new schedules and stuff for the last quarter and also going into next year. So as you well know, Shadow Traders is always moving with the times and evolving and releasing new things, and they've given you a lot of free stuff, a lot of free boot camps and things like that. And so we are looking at doing some things for the last quarter for you guys and getting you really ready for next year, so you can so you can tackle next year with some real confidence. So we're going to be releasing some of that real soon, in the next short time. At the moment, I'm just waiting for a couple of things. So I want to get some of your feedback, because I'm presenting a couple of ideas to Shadow Traders, with some things that I think would really help a lot of you traders based on some of the emails that you've sent me. So for right now, as far as the schedule goes, I haven't heard anything on the chat room yet. We're basically, as you know, we'll be moving out into the auto trading phase, although the auto trading is not ready to be released yet and won't be for probably a good while. I don't have any news on that, so I wouldn't be, I wouldn't be trying to just hold out for the auto trading. I would just get on with what you're doing. Get used to the Segredo Quants. Start using the Segredo Quants, because it's a fabulous tool once you know how to use it. And I'm going to be incorporating it more in the training so that you guys can actually learn to use it properly and benefit from the advantages of using that tool in addition to your current trading. But so when the auto trading does come out, at least you'll have built your account up, and you can always diversify and have it as a sort of a side thing. Because remember, with the auto trading, you can go surf around on the internet. A lot of brokers have their own auto trading systems. Even AMP does. And if you go look in their statistics, you'll see that they only do about 2 trades a week, and even then they still lose, So it's not a guarantee. It's very conservative. You're not going to be a millionaire by Friday. So you really just need to look at it as a diversification tool. Stick to your basic trading plan, and this way you get the best of both worlds. Any pointers on stock management? We will be covering that. So the other thing I want to quickly announce as far as the schedule is that I will be bringing back the evening classes for the U.S. traders and Canadian traders, because I've had a lot of emails requesting this. So it's going to be from 7 p.m. now, not 7:30. That way we don't run too late. So starting next week, we're also, Shadow Traders is bringing back the 2-class schedule for you guys to accommodate the various different time zones and different people's schedules. We want to try to accommodate as many people as we can, also based on your emails. So thank you for sending those emails in. So every week on Thursday now, I'm going to keep it to Thursday because Thursday seems to be a good day for everybody for trading. So every Thursday, I'm moving my lunchtime class, the 12:30 class, to 2 p.m. The reason we're doing it at 2 p.m. is because it's a good time in the market at that time. I'll probably start a few minutes before 2, but also all the other Europe and UK people that we have can dial in at that time because it's 7 p.m. in their time zone. So I want to try to, give I want to try to give as many people as possible. So from next week, today it's 12:30, but from next week, the 12:30 class will be 2 p.m. Eastern Standard Time every Thursday. And then the evening class, the Thursday evening class is coming back, but it's going to be 7 p.m., not 7:30. Okay, so please take a note of that and be sure to always check the website because we are going to, sometimes you'll see nothing there and then suddenly you go check again and something's there. So you want to be sure to keep checking the website for updates. Will the evening classes contain the same information? Yes. Hooray for night classes, somebody says. Excellent. Is there a class today at 4 p.m.? No, it's 7 p.m. The class today is at 7 p.m. It should be 7 p.m. Yeah, 7 p.m. If you go check the website, it'll say 7 p.m. guys, not 4 p.m. Okay? Eastern Standard Time. So that's it that's all I have as far as the update. There's more things coming. We are talking about doing an event for you guys in the last quarter. Something that's going to be really exciting. We haven't decided exactly what yet. We're sort of in discussion mode at the moment, and we will let you know. I'll let you know as long as when Shadow Traders finalizes their decisions. So that's coming out real soon. So make sure you come to the classes and check the website on that. And you can always email me. Now, in keeping the last thing I want to say is starting next week, I try to cycle through different subjects, different agendas within 30 days. But starting next week, I'm going to start a new series because we are in the month of October now. And we want to try to capitalize the last quarter going through till 15th of December, and that's when we usually close down for the holidays. And then this way, we'll come back in January. So I want to start a new series of classes, and for those people who are just coming in and joining with us, this is a good time for you. So you want to try to attend all classes each week. You don't have to attend both. You can just attend one of the 2 classes, but you don't want to miss. You want to try to make each week because they're all running a series, so you can connect the dots more effectively. Because unfortunately, I only have 2 hours, and there's not enough time to cover everything there is to cover. So I try to break it up into different sections. But in keeping with last week, where we talked about establishing and maintaining that focus, and one of the approaches you can do to help your focus in trading is working with your workspace, playing with the different types of Segredo charts, different alignments, along with your ninja charts in different alignments. So we covered that last week. I'm going to highlight a couple of things today. Oh, good. Welcome back, Eldon. Eldon says, it's so great to hear your voice. It's been several months. Well, welcome back, and make sure that you check the website. For those people who are coming back, you must download the latest 7.14 and always go back to section 7 in your self-paced course and check any additional indicators. We always put it in there. And for everyone, make sure that you reread the self-paced course, especially some of the important chapters like chapter 5, where it talks about putting it all together. You can go through the different strategies because it just refreshes things. But when you come to class, you'll see that we're always evolving, guys. We never stay stagnant, and we're always breaking new ground, looking at things from new perspective, and there's always new ahas for traders. So it's good to have you back and try to stay dialed in because you'll make good progress this last quarter. Could you please go over how you can put just a few symbols, ones that you use, on the Segredo Quant? Sure. I will cover that a little bit today as well. But the first thing I want to talk about, there's one more thing in terms of the announcement. And every now and again, I like to read feedback from traders because I think different people going through the same learning curve can really learn from different feedbacks and inputs from different traders because they can relate and they understand where people are coming from. So there's a couple of things that I picked up. Don't worry, I'm not going to give away people's names, but I just wanted you to see the different types of issues that traders face, and you probably relate to some of these. But I have a real specific reason why I'm covering this. So just if you just bear with me, I'm just going to read through a couple here. Trader 1 wrote me this week and says, I have great difficulty trying to quantify the matchy-matchy concept. I am a hopelessly left brain type, and I can only see the big picture by breaking it down into smaller pieces. I've tried to analyze matchy-matchy into different elements, which, if any, are the ones you place the most importance on. And that's a really, really good thing because importance on a specific indicator or strategy is the key factor here in terms of understanding the timing for your given strategies. So in tying together with last week where we talked about focus is what's going to make that importance that you really need to hone in on stand out. And I found that the traders are really successful who break through the learning curve, through all the trial and error, finally to settle down on something and make it work, are the guys who do focus on it on a certain importance. Everybody does, even Barbara does. Everybody has a nuance or a style. They take a strategy, they take a couple of favorite indicators, and then make it their own. And so I'm gonna touch on this a little bit today and continue with last week's maintaining that focus subject. Trader number 2 says, I've been so frustrated trading since January. I've tried different techniques and it finally sunk in that I need to hone in on one technique that I can see more easily and work to get it really good at it. However, it has proven a challenge. I've been trying to do gap closes on crude oil and GC. I wait for all basic confirmations for the gap close on the 1-minute chart per the gap close requirements. The problem that I've been facing lately is that some days my technique works and some days it doesn't. On days that it doesn't work, the price catches up to the HMA in the 3-minute and I enter the gap close, and then when the 3-minute candle closes and the market doesn't close and the gap doesn't close the gap, instead continues with the trend. On the good days, the price catches up to the HMA, 3-minute, and I enter the gap close, and then when the 3-minute candle closes, it works beautifully in my direction. So unfortunately, like I've stated many times, just because you have some rules and you have some indicators doesn't mean that it's a guarantee. There's always the good and the bad with every strategy, and this is why having focusing on and maintaining a certain alignment can filter some of those fake outs. So we're going to highlight some of that as well. And you can see it doesn't matter whether you're focusing on the trend or focusing on the gap. It really doesn't actually come down to the specific strategy. It's all strategies and all types of traders. You're going to run into some of these issues. Trader number 3 says, I'm wondering whether I'd trade better if I had a job. I think we can all relate to that. The knowledge that money would definitely come my way may lessen the stress. I don't want one. I don't want one, but happy thinking about that. I had to put that in there because that just cracked me up. You are too funny. Yes, so I wanted to highlight that because the psychological aspect is a is a huge part of trading. It's not just the strategy. It's also the psychological side, the fear of losing money, your personal circumstances, what's going on in your life. Is your wife nagging you? All these factors come into play. Trader number 4 says, "Hi Melanie, I've noticed a problem developing in my trading. I am combining all 3 trades, clear, gap, and perfect. And the outcome is the perfectly bad trade." Another one. "I started with 2 ticks for 2 weeks and was thrilled with the results. I am one of those nervous traders. After I did the 2 ticks for 2 weeks, I lost all my profits on one trade. And I am a lot hesitant. Thanks." So, so as you can see, you can start to see the different influences on different traders. This trader will probably do better by focusing on one strategy as opposed to trying to conquer all 3 and grab every opportunity in the market. That's just a little tweak that we could make, you see, that could change things drastically in terms of performance. So, last 2 years, this other trader says, "I would very much like, and I'm in dire straits, to have you, if possible, to coach me for a couple of weeks, or however long you normally coach students that are struggling. I'm down about 7,500 so far this year. About half of that is commissions. I funded my account approximately 4 times this year, each time not more than 2K, mostly less, and I've blown out 3 accounts." So we have to talk about, when we're facing this situation, we have to talk about risk, how much margin you're dealing with. Maybe you're doing too many trades for a 2K account. So there's different influences that can affect your outcome. And lastly, this trader says, oh, this is terrible. I meant to mention this first. One of our traders, unfortunately, his name is Jack, has had a stroke in this past week. So I just wanted to mention that out there to you, for you guys to just keep him in your prayers. Unfortunately, these things do happen, and he is a member of Shadow Traders, so I just want to let him know that we are, and his family, that we are thinking of him, and our prayers are with him to get well very quickly. But this trader did mention something that caught my attention in letting me know about Jack's situation, is that this trader said that we're very upset about Jack. He's a member of our trading group, but she also went on to say is Trader A, which I'm not going to mention his name, Trader A already makes about 1 million a year. We, of course, do not, but the team is very active and we meet every week. Now, I left that one till last because I want you to see that the different types of struggles that our traders are facing, and these are just the emails I got just this week, and this is only a few of the many that I get. So I want you to see that when I'm looking at your feedback, I'm seeing traders give me all kinds of feedback from different aspects. It's never just one thing. Can you help me with the gap trade, or can you help me with the clear trade? It's many different aspects that are going to influence your performance with trading. Trading is a very complex subject. And we never said it was going to be easy, but what we try to do is to simplify it in many ways. And the thing that I want to note is, Trader A, who's doing very well, is tied into a very good group over there, and obviously they're all working together and feeding off each other and maintaining that group camaraderie, which I'm sure is helping a lot. They're all learning from each other. But there's a fine line that I've noticed between Trader A and other rock star traders that we have. He's not the only one. We have many traders that are hiding in the background. They don't like to come out and blow their trumpets, but they're doing very well, and even traders like Sid, who has 4 businesses and he makes $1,500 a day every day part-time. So we have lots of traders who are doing well. Not everybody is doing poorly. I want you to know that. So when I look at this information, I'm always trying to tackle the problem with each week in the classes of how do I bridge the gap? How do I help the trader who's missing the mark, who's blowing up his account, who can't understand the trend or can't do the counter trend? Or how do I get these traders to connect the dots to become like a trader A? And I'm not saying that everybody's going to make $1 million. Please, nobody is, because this person's obviously trading with a lot of contracts and has the confidence to do that. But what I do want to stress here is that there are many issues to address. And so one of the things that before I get started in the agenda here, and I'm going to tackle some of these pointers, is I would like some feedback from everybody. If you can send me some emails, because over this next quarter here and coming into the next year, we're going to, like I said, we're in a restructuring stage. We're looking at, based on your feedback, what has worked in the past, what hasn't worked, and we're trying to come out with some new things. Now, a lot of traders have asked me for coaching, and I just want to quickly talk on that for a minute. I haven't done coaching in the past because I've done a few free one-on-ones with people, and of course, my time is limited. I can only do so much of that, so I can't help everybody with free one-on-ones, only the real desperate ones. And but I haven't done coaching in the past. I know we've had coaches like Cheryl and a few others, and they charge, like $75 an hour or something like that. And one of the reasons I haven't done this is because I don't want to make money of somebody who's struggling. I have a thing about that. I'd rather make money if you're making money. I don't want to profit off your inabilities and weaknesses. So, and B, I personally feel that you can't fix a trader in an hour. It's just not possible. So I don't think it's dollars well spent, personally. That's my opinion. And that's why I don't offer coaching services or charge for coaching. So what I would so here's one of the things I do, and in looking at all the feedback that I've given with traders, is I do want to look at some type of coaching environment that walks traders through a step-by-step, because we give you the self-paced course, but not everybody necessarily does it. I can't walk through the self-paced course in a single class. It's not feasible. Now, we do cover those in the boot camps. We do those periodically. However, even so, it's such a huge volume of information. Traders don't necessarily connect the dots right away. It takes time to assimilate so much information and connect the dots effectively, be able to perform. So I'm looking at some type of coaching for you guys, some type of, I don't know, maybe a weekly coaching class just for people who want specific types of coaching, and break it up into little groups type of thing, giving you programs, giving you specific trading plans to follow, specific templates to use for different strategies and so forth. These type of things help traders to really establish a focus, try it out for a month, see if it works. If it doesn't work, try a different one for the next month, that kind of thing. So I feel like if you're going to coach someone, you really need to give them sort of a 3-month plan and let them really try different things, and then go through the transition and the trial and error, the learning curve. So unfortunately, to pull something like that off, it requires other people, not just me. So in order to do that, there has to be some sort of a fee associated with it, because I can't just give time away for freely. And also I found that if people don't have skin in the game, they don't value the information. So, it's the good old saying, you've got to have a little skin in the game to really appreciate what you've been given. So I think, I don't know, some sort of a fee, a monthly fee, maybe like, I haven't figured it out yet. But what I'd like to hear from you is feedback on what type of classes you like, what type of boot camps or events you would like, and what type of, if anybody's interested in some sort of 3-month coaching plan where there's special coaching classes and special exercises and emails to follow up with and things like that. If you're interested in something like that, we can put some sort of presentation together and see if you guys are interested, and how many of you are interested in something like that, to help you sort of sift through all the information that you've been given and establish a real trading plan, a real focus to get you off the ground. Okay, so send me an email to Melanie Trades. I'd really like your feedback, good, bad, and indifferent. And like I said, we'll figure some things out and we'll present it and see what the shadow traders executives say and how it'll work. But I'm counting on you guys to give me feedback. I'm not going to just create something that you guys don't want, you know, because we follow your attendances. And if you don't attend something, then we know that you're not getting a whole lot out of it. So then we change it to something else. Okay? So anyway, that's all I'm going to say about that. I'll be looking out for your emails. I appreciate it. You can send me good, bad, and indifferent. You can be brutally honest. You can tell me my classes are terrible, they need to change. You can tell me anything you like. I'm not going to take offense to it. But I would appreciate your honest feedback. That way we can go into next year and in the last quarter with some real productivity. All right, so starting with, and I wanted to show you this last trader from the list that I just read. Here's a trader that sent me a snapshot. I like it when you guys send me snapshots of some of your trades, because then I can see what type of timing issues you're dealing with and what type of rules you're overlooking in trying to trade. And this trader says, I'm having a problem with my entries. I drew a blue line as support. I had the turn of the Linreg 4 up doing a gap close. I entered at 35.28 at 6:29:52 a.m. and exited at 35:31 at 7:34. My goodness, a whole hour later. The heat before it hit my exit, and it took over 1 hour to trade. I know that there was not 5 ticks to 13, but I was looking for the bounce on the blue line support as it had been there several times. What can I do to correct this drawdown? So unfortunately, as you can see based on this entry, this trader was looking to try to do a gap close, which is your counter trend strategy, against a very strong trend, hoping that the support will be there. Well, one of the things about gap closes like this is you have to reuse certain alignments for certain indicators. So it's all about what indicators are you really using to give you the perfect alignment you're looking for. Now in this case, I noticed the STOs, the HMA hadn't changed to red yet. And I don't know what the support blue line you're using, because I don't see that being a shadow trader indicator. That's something you've added in addition to shadow traders. So, you know, I don't know how strong that support line really is, and if that is something you should be using. So these are different things that can really affect different traders' types of timing. So we want to look at what is it that you guys are really doing, and how can we help you to establish a real focus and work with specific alignments following the set rules as Barbara Cohen is designed for the strategy. Because remember, she has spent many years and she's back tested over 750 formulas to come up with what really works, what works well together, and what doesn't. So she's put the painstaking time in already. So what we want to do is we want to take that criteria that she has painstakingly put together, and we want to make it our own. We want to own it. We want to have the confidence to be able to duplicate it and know when you're going to get faked out. Oh, if you have somebody who's interested, so somebody says we have somebody who's interested in the shadow traders. If you do, just send me an email, because we are, like I said, we are going through some transitions and there's a lot of updates going on right now. So we're using the summer and this end of the year to make these transitions to help you guys. But if you do have friends you want to bring, we will be doing some more things for you, and I also have videos and specific links of presentations that you can have your friends watch if we don't have something scheduled for you. So definitely send me an email and I'll help you get your friends started. So that's a great point that you just mentioned there, because a lot of people that are trading in groups, like the guy who's doing really well, um, that maintaining that group and having that camaraderie with different people and bouncing things back and forth is sometimes also a very, very helpful tool in trying to get through the learning curve. So I encourage people to really reach out to your friends, and I'm talking to shadow traders right now to see if we can restructure our package and make a special promotional package for affiliates, just for people who want to bring their friends, so that you guys can start your own little trading clubs. Because I really believe that the more you're engaged, the more that's why I'm looking at some of this coaching thing, the more you're doing a sort of a group activity, the faster you'll get through the learning curve and you'll have less trial and error, instead of hacking in the jungle trying to figure things out yourself. Unfortunately, all my friends are chickens. Well, you never know. If they come to a couple things and they see how we break it down and how simple we can try to make it, then you never know. Okay, so let's get started here. So the key thing is maintain your focus. Now you can see that I took a little quick 3-tick trade right before the class. I was hoping to get in the class so you can see it happen. But basically I was using the mirror for that entry. It gave me a 3-minute sell over there, and on the cross it had a cross. It gave me the real mirror signal. So somebody asked the question about setting up this workspace really quickly. If you'll notice on the side here, if you're using the Segredo, you'll notice that there's a long list of different markets you can access. There's the stocks here. If you click the NYSE, the NASDAQs, these are your stocks, 2 different stocks. We have the futures, and we have the Forex. Now, if you notice that there's a long list of markets, it's not very practical while you're trading to look at all these markets and all these charts. So the best thing for you to do is to create a portfolio and select your favorite markets so you have a focus. And the easiest way to do that is to simply put a plus sign at the very top here next to the word portfolio, and you simply give it a name, and you hit OK. I've already created a few. You can see it saves it, and then you click on your folder and you add some markets. You simply do it by hitting the add symbol key at the top here, and you type in the market that you want to add. You can just type in the first 2 letters. It will pull up all the different months of the year. So you want to select the month that you're trading in. Each letter represents a different month of the year, and it takes a little figuring out as to which month we're trading on. And as you can see here, it puts all the charts in on your list, and you can actually get rid of the ones you don't want by clicking on the X's. So if I'm not going to use a 15-minute chart, then I exit out. I'm going to use a daily chart, I would exit out. So you can actually make your list nice and short and sweet and just focus on the ones you want. Now if you want to create a chart, it's very simple. You just click on the symbol, the actual letter, and it will pull up a chart. And this is what your basic chart will look like. Now there's a couple of features on here. You can change the background to dark if you like. You can also change the type of chart. You can have just the candlesticks or just the histogram at the bottom, which we call the oscillator, or the combination of the two, which we call the Segredo. You can also change the individual charts to different time frames. And if you click the little L here for Larry, you can link different multiple charts, so that if you happen to change, if you click all the L's, if you happen to change one of them up here in the symbol, you can change one chart to a different market, and all the charts will automatically change. And remember, of course, there's the zoom factor. You can look at more history of your chart. You can zoom it in to look at more close. And so you guys can play with these features, and then we do have the tooltip here, which you can check and uncheck. and you can place your cursor on the individual candles, and it gives you the open, high, low, close, and the time of that bar. Okay, so that's just basically the quick layout of the Segredo. The X's to delete a symbol don't appear in my watch list for Forex. I think there might be an arrow here or something. Email me after class and then we'll see if we can troubleshoot that for you. Must be something with maybe stretch your chart out or something. Expand it. Okay, so now what I have noticed today is that very nicely the euro starting to come back to battery finally. My goodness, it's been real horrendous this summer. August was a complete waste of time for currencies, and it, especially in the first week of even during September, was really nothing to get excited about. But I see today we had a very nice run to the R4. So the first thing I just want to quickly say, the reason why I'm showing you the euro really quickly, is that when you're choosing your strategies, it's not enough just to follow specific rules for entry. You've also kind of got to look at the bigger picture. You got to know what's going on with the market. So when I see as the zone, let's call it a zone. When I see a zone like this, where I'm here, back here, and I see that the market's pushing through the R3 pivot, which is your purple pivot here, I'm not really going to be looking to do my counter trend strategy, because for a trendy market like the euro especially, which is a very trendy market, you know, trading between the R3 and the R4 it really is really more inclined to go in one direction, which is straight to the R4. Now it'll do it in stair steps, so your counter trends are going to be short-lived and your trends are going to be much stronger. So you want to keep that in mind. I mean, there was one nice little reversal trade here that you could have, you know, scalped and made a nice few ticks on. But on a couple of these here, if you got in on this one, that would have been a losing trade. So knowing where you are in the grand scheme of things is just as important as understanding a particular indicator and a specific rule. And this is an important part that I want to focus in on today, as well as the rules for the strategy. Excellent. Stephen says, I'm up 480 today. I only enter on the quant charts and use the ninja only to confirm. Excellent. The quant rocks. I like that. Very good. GC moves many ticks, 8 to 10. Yeah, gold is a very volatile market. So the other thing is you also want to look for is which markets are going to perform better with which strategies. It's not enough to just say, well, I'm a gap trader or I like the trend trades. You want to know, okay, so these markets do well with trends, like natural gas, the currencies do very well with trends. And these markets do very well with scalping type of, you know, in and out, quick scalp those gap trades like gold and crude oil. But also understand, as you can see from this photograph I showed you earlier, you know, if you're going to counter the trend, you really got to have your timing down, because, you know, the trend is your friend. And if you're going to counter it, you be careful. If you haven't really waited for that momentum to die out, to look for those real opportunities, it can turn on you hard and fast. And then what happens is, especially in markets like gold and crude oil, the phenomenon of the deer in the headlights kicks in, where you freeze. You just become frozen. And unless you've got a built-in stop, suddenly you're down 300, and now at that point you're not willing to hit the close. So then you go through the struggle of, do I exit, is it going to come back, and you start, and it's all these mind games that you fall into. So the counter trend, you really got to have your timing down to a science, and you have to know when the momentum is truly ending. So there's a couple of alignments that we really look for, things like we use the Stows and the MACD, overbought, oversold phenomenon, to help you see when that momentum is really coming to an end. So, and it's the reverse for the trend. You know, with the trend, at the same token, if the trend is dying out and it's hit the top, you don't want to push the envelope and start thinking on the next green bar that it's going to go higher. So again, you can also look at things like the Stows hitting their overbought and oversold to tell you that the trend has hit its confirmed high and it's over. So you can use the same type of alignments for both strategies. It's time to start your counter trend. So these are the key things that we want to look at. Let's take a look at a couple of entries here. Do you know why my HMAs is under my candles versus being on top of the candles? Not sure what's wrong with my properties. If your HMA is underneath versus on top, it's very simple fix. It's called the Z factor. You can actually search it on Ninja and it'll explain to you. But you just click your cursor on a single bar, hold your control shift key down, and roll the center wheel of your mouse. Now you must left click first on inside the candle. If you just do it on the chart's going to move back and forth. And this changes the display. So it puts the indicators where you want them. So if you want them behind or on top, and you just release it at the level you want. Very simple fix. It's called the Z factor. You can search it on Ninja. All right, so I'll pick up some more of your questions in a little bit, and for those of you who come late, I will pick up the announcements towards the end of class. So the key thing I want to focus on here today is, last week we talked about maintaining your focus on a given strategy, and I want to look at using your workspace, but I want to look at a few other issues that we need to address in terms of the focus. As you can see from the feedback we've gotten from different traders, there's all kinds of issues. One trader is trying to do all three strategies, another trader has a problem seeing the matchy-matchy, another trader has a problem because the gap doesn't always close, so there's all kinds of issues, and I can't fix all of them in one sitting, because we'll just, it'll be we'll be going all over in too many directions. So I like to cover a different agenda each week, and if you come to enough classes, you eventually connect all the dots. So here we have the euro for right now, and I have in here 3 Segredo charts along with my Ninja charts. Now, one of the things we talked about last week is alignments, and I briefly didn't get into too much, but I want to get more into today. I briefly talked about things like the alignment with the 15-minute, waiting for a certain alignment with your 15-minute, or waiting for a certain alignment with your 15 and your 5-minute, or waiting for a certain alignment if you're a scalper type trader with your 1 and your 3-minute. So waiting for different types of alignment is a very good way of not getting faked out in every little change, because remember, when you're real-time right side of the edge, every candle after a while starts to look like a sexy candle. And just like our good friend who was trying to do a counter trend, he said, my Linreg 4 had turned, I'd bounced it off the support point, and so on and so on. You think you have what it is you need to execute your strategy, only to find that it all changes. And then you feel betrayed by your indicators, and you feel like you're stupid. Well, the bottom line is you're not stupid. You have to remember that there's always an element of change, and you also have to remember that these are electronic indicators, and there's a very human side to the market. The setup may be there initially, but then there's no follow-through because the players decide not to play in that direction. They don't show up. Only a handful of people showed up. That's why you had the setup. But nobody decided to jump in on the action. And so that human side where people play versus don't play in a given direction at a given moment is what causes you to get faked out. And you just have to, it's part of the course. You have to expect that you're going to have a few of those. You're not going to be you're not going to hit it 100% every time. So here we got to look at risk factors and the law of averages. We got to see how many hits we make versus how many misses we make. And on the misses, how much do we really lose? So this is where your getting your, ironing out the kinks of your trading plan is really, really important. You can't just trade indicators blindly like a robot, because it's not a guarantee, and you're just going to be frustrated. So one way to help you to avoid this frustration is in playing with the law of averages understanding. You say, okay, I'm going to only trade a certain alignment. When these things show up, yes, it might be the Linreg 4, but it's the Linreg 4 plus the Stows plus the MACD, and my 15-minute gives me a number 2. Or my 5-minute gives me a number, 3. You have to work out what alignment in the sequence of the algorithm is there for you. Now I'm waiting to see if there's any action on the euro, and unfortunately it tends to fizzle this time. Let me see what's happening in gold here, so I can find a real-time example for you. And we're going to look at the see what the mirror signal says. Okay, thanks for that, Clive. So, but remember, Clive says that blue line is where my candles hit. That's Barbara does the same thing. But remember that it's not always a guarantee. Sometimes, like I said, there were more traders interested in continuing the trend at that particular time than the traders who are interested in turning it back the other way. It's always a constant fight between the bulls and the bears. And just because you have something electronic that tells you there's a trajectory or there's a cross doesn't mean that the players are going in that direction. That doesn't mean everybody's going to show up. That's the human side of the market. That's where the risk element is. And at the end of the day, you are just playing the law of averages. So it's about how many hits you make, how many crosses are you able to get in on that actually work out versus the ones that don't. And the ones that don't, you got to decide what you're willing to risk on those. So at the end of the day, you still make a profit. And then that's what we call a trading plan. It's that formula. How many, if you enter at point A, it goes to point B, and if it doesn't, you only risk X number, and therefore, if you do that enough times a day, you still be profitable. So you can't be caught unawares or have any surprises. If you're caught unawares, that means you don't have your trading plan ironed out. You don't have a focus. You're just trading rules is what you're trading. You're not actually really trading a trading plan. I want you to learn the rules and take it one step further. I want you to combine the rules into a plan. So you need to take your rules to the next stage. It's not enough to just know rules about trajectories and crosses and bounces of support and resistance and so on and so on. It's not enough. It's not a guarantee, because there's always an element of change. So keep that in mind. Sometimes I get angry emails, oh, my this changed and my this did that, and I have to remind people that that's the thing about the market and electronic indicators. It's not a guarantee. So we have to adjust our expectations and design our trading plan to accommodate this element. Then we're not surprised and we're not betrayed, and you're working towards a long-term goal of consistent profits. How do we get to that next level? Well, that's what I'm working on. That's why I'm really interested in getting your feedback. It's kind of like, help me help you. How do we connect the dots here? How do I help so many traders with so many issues? It's okay. So let's. I'm going to pull up my gold chart for a second here, because because we're doing a little counter trend here. So you can see as it's peaking, it's hitting, you've got your fractal giving you your resistance, and you've got your Christmas coming in. Remember? So with the Sagredo, one of the things that you're looking for with exit points or entries for counter trend is the first thing you're looking for is either the change in the color combo. So you're looking for, if you were a green number with a green bar, and suddenly you have a green number with a red bar, now the colors don't match, and we call that Christmas. And that says there's a change. Things are changing. It's no longer green on green. We're no longer trending long. So when you have something strong in a direction, it would either be a green number matching a green bar or a red number matching a red bar. And when you see a change, then you'll see suddenly the numbers will go out of sync. You'll have green with red in either direction. The next thing you're going to be looking for is your short-term trend line, which is now changing from green back to red, your HMA color change. So when that changes, that also is your next leading indicator to say we're switching from bullish to bearish. We're changing from long to short. And then ultimately, the next thing you're looking for is a cross of something. So now you can see that the HMA is crossing your slow trend line, which is your gray line, your 13 moving average. And the cross of something is also an additional confirmation that we're changing from bullish to bearish. In addition to that, if you add the histogram at the bottom here, remember your blue and your yellow bars on your Sagredo represent change of direction, the change of the trend. So they're actually showing you your counter trend into the new trend direction. So as you can see, we were coming short before with the red bars, and the yellow came in and said the downtrend is over. We're now changing to the uptrend, and then we go from the yellow to green, and as the uptrend develops. And then when the blue comes in, it says we're now changing from the uptrend to the downtrend, and then after the blue, we're going to go into the red bars to say that the trend is definitely developed. So, and sometimes the red may not come in for a while. So it may be blue and some green and blue and some green. As you can see, it may take a little bit. So you want to add the color combination factor with crosses of trend lines to confirm a direction is going to hold true. So as you can see here, we did have a significant cross here, which gave us a pretty strong nice little counter trend, a gap trade. But the nice thing about having your ninja there as well is you can see other support and resistance information. The Sagredo Quant is going to help you with the timing, which is why we use the numbering sequence. And if we add the fact that we've got some support and resistance information, we're going to use both factors of support and resistance with the timing of the numbers to help us see how far is it likely to go or where is it likely to stop. So always remember that when you're using the Sagredo for timing, you're looking to trade between your numbering system of 1 through 8. You want to be out by the number 7, or if you see the color Christmas show up before the number 7. So in this scenario here, you can see here that we cycled 1, 2, 3, 4, 5, and we changed on 6. So it was one number before 7. It doesn't always make it to 7. And so the first sign of Christmas, if I was in this uptrend, I entered on the number 1, I would have been out at number 7. So I would have entered something here, done my trade, hit the confirm high, and I would have been out by Christmas or 7, the very latest. So you want to maintain that cycle of evolution. Now, it doesn't always make it to 7 every time. As you can see here on the counter trend, we started number 1. We've got a red number 1 with a blue bar. So this coming short. So it's giving you the timing of your counter trend. Now this is where the Sagredo, I think, really shines, because when you do look at your ninja, a lot of times we're very uncertain. Like that trader says, we're very hesitant, right? Because we see too many things. Like if you look at the scenario here, you've got the support of the 13, you've got the 100 there, you've got the support of the 20 SMA, you've got some fractals in the way, you've got these brown support fractals. So there's a lot of things in the way that would make you very hesitant to make that trade. So if the nice thing about the Segredo is, to a certain degree, what it's doing, as you can see here, is it's actually filtering some of that and saying, no, we really have something significant here. The importance is of this, the strength of this direction is overriding those additional support issues. And this is what I want to look at today to help you establish more of a focus. Because touching on that importance issue, you're going to have lots of indicators and you're going to have different patterns that you can follow. Like you can follow the MACD cross. You can follow the three stows crossing the oversold line and overbought line. You can follow the moving averages crisscrossing when the green line crosses the black line. So there are many different patterns, but certain alignments and certain importances will override additional indicators. So not every indicator is absolutely important every minute of every trade. And this is where the experience comes in. You know, this is things like where, you know, experienced traders develop that eagle eye, you know, and everybody, they know that when this and this happens and this clicks in, this aligns with this, it doesn't matter about the blah-de-blah and the blah-de-blah. It's going to go from this point to this point. I'm going to take it. So Barbara has her timing figured out, you know, and Sid has his timing figured out. And this is the thing that you have to backtest on the simulator. It's not enough that you just know the rules. You have to own it. You have to really go there and go, okay, I've tested this one. I've tested if I get in on this number one, and I think it only works some of the time. You know, like Clive says, I've tested my blue line and it bounces so many X number of times. You know, so you have to go in and really develop that certainty by doing it over and over and over, and playing with the law of averages, how many times you get it, and where you can overlook certain indicators. So somebody says, but which one do you trust more, the quant or the ninja, as they often conflict? Well, that's a good question. Which one do you trust more? Well, here's the thing. They're both going to give you fake outs. Ninja's going to give you a fake out, so's the quant. The quant's going to give you a number one that's just going to fizzle. It's also going to give you a red number one that's going to change to green. The colors do change. This is, you know, like I said, nothing is a guarantee. Look, here's a red number one that came short. It went straight to a green number one. Had you got in on this number one, this would have been a stop out. So you have to be able to work with the alignment of more than one chart or the alignment of more than one indicator to know which one is short-lived and which one has some real strength to it, some longevity. So for instance, I'll give you two examples. This number one here, I would never take this one, because even though my blues, you know, I could say something like, I'm not going to take this one because the HMA hasn't crossed the gray line. So right away I've just ruled out that red number one. So I could say I want another red number one, but I want a red number one with the HMA crosses. That's the one I'm going to take. So immediately you just eliminated certain numbers of fake outs by adding the number one factor with something else in alignment. We've added the number one factor with a cross factor. You've added two factors in the equation to give you more strength. Do you see what I'm saying? So it's not enough to just say, I took a number one, it was red on red, and we're all good to go. Another way you can do it And this is what matchy-matchy is for the trader who asked me about matchy-matchy. You can do it with 2 time frames. So if we go to 13:15, where are we here? Oh, wrong market. Thought that looked weird. Hold on. Just stay with me here and you'll see in just a second. What is the HMA? Okay, says that's a good point. An HMA is the whole moving average. Now you probably have a little catching up to do. I haven't covered all the indicators. You're going to have to do your go through section 7 on the weekend. And the whole moving average is, it's basically a moving average, but it's not the same as, it's a different calculation to our regular moving averages. It's more of a short-term moving average. So it's just a different calculation, but it is just another moving average, just like your regular 13, 20, 100 and 200 moving averages. It's just a different calculation. So you can see it gives you more quick changes, so as opposed to the lagginess of the moving averages. And it's very important to have the two, because you want to balance short-term trend lines with longer-term trend lines to really see when we're really bullish and really bearish, and what's a scalping opportunity and what's a real trend. So it's very important to have the two different views to help you see the time. You can't have all leading indicators and all lagging indicators. That's not going to work for you. Okay, so let me quickly show you the next point in terms of maintaining that focus and answering the question about how do you know which one's true, because you know sometimes the secreto fakes you and sometimes the ninja fakes you. So again, we're talking about alignments, looking for alignments to establish a real focus, and but still sticking with the criteria of the strategies as they're designed, still sticking with the rules, having the rules incorporated, but we're just adding one more factor to the equation to really make the high probability ones stand out. So if we look at 13:15 here, you can see the 5-minute chart. Okay, the 5-minute chart was clearly green HMA with a yellow bar with a green number. So the numbers were in sync with the colors, and we have an HMA crossing the 13 trend line. Now what the 1 minute's showing me here by 3:15 going to 3:16 is it's just showing me a little bid and ask price action dip. So the 1 minute is showing you the short term, the quick changes. It's not showing you the long-term range. It's just showing you quick changes in a given direction. The 5-minute is showing you more of the long range. So when I see that they're out of sync, now my 5 minutes doesn't match my 1 minute quick change to go short here at 13:16. It's clearly there's no alignment. That's a contradiction. Then you don't have a matchy-matchy. It's one chart does not match up with another chart. And you can match based on trend lines. You can match based on colored up bars. If one is blue and the other one is yellow, if candle's green and the other candle's red, you can match the fact that this HMA is green and this HMA is red. So you can match up all kinds of things. You don't have to just match, and you don't have to match everything to make a trade. You can just go on color candles. You can just go on trend lines. So it's up to you what you want to match up. But the point is you're matching two different time frames to find out where majority of the traders are trading. So as you can see here, finally when this got to Christmas at 13:25, let's go to candle number 5 here, 13:30, now you can see 23, 24. So now by number 13:25, when we got a red here and it's Christmas here on the top, I can see that this up direction has fizzled according to the 5-minute. It's starting to fizzle. And maybe I trade on the 13:30 candle. You know, maybe I want to go in here when I'm really sure and trade the real meat and potatoes of the direction. So you wouldn't wait for the 15-minute to match as well. No, not necessarily. So here's another, that's a very good question. Here's another point I want to make on this matchy-matchy concept and timing issues, is that you also have to decide your risk model. Are you the scalper type trader who's dealing with a $2,500 account and your short-term goal is to just make another 2,500 bucks over the next 30 days? You just want to double your account. You want to build it slowly, and once you know that you have 5,000 in your account, now you're ready to, like, do a few extra trades, play in a couple of extra markets. So you got to have short-term goals, medium-term goals, and long-term goals. So this is very important, because you're not going to go trade a 15-minute chart, okay? Because here's the thing. 15-minute candle, if you look at these long wicks and tails, they can go up and down for an entire 15 minutes. Just because it's a green candle on a 15-minute chart doesn't mean it's not going to go short. Okay? Because that is filtered, the quick changes, and it's just giving you the overall trading direction. And so if you've got a $2,500 account, you can't sit there through that up and down inside of that green candle. You can't, because you just don't have enough margin to work with. So deciding on which time frame you're going to work with is all about your risk. How much margin are you working with? So if you are the little guy who's just trying to, get your feet off the ground and get a handle on this, then you really are forced to trade on the quick changes, on the lower time frames, so that you can minimize some of that whipsaw, that risk, and just get in when everything's aligned all red or all green, so that you know that it's going to just go from A to B. You're going to scalp your 3 ticks, you're going to get out, and you're going to do that for the next 30 days to make your extra 2,500. Now maybe if you're at 5,000 or 10K, now you can go to a 50-minute and say, well, now I'm going to take a number 1 and on my 15-minute chart, and I'm going to ride. It doesn't matter where the tails, how low the tail is going to go. It doesn't matter to me, because I'm going to go in with my 1 contract, my 5 or 10K account, and I'm just going to wait till it gets between 2 and 7, and I'm just going to take my profit. That's when you become a true trend trader, and you're quite happy with some of you're fine with the heat because you have a certain alignment. Oops, wrong market. So do you understand the point I'm making? I don't know if it's a matter of which is more important for me. Is it how many dimensions do we put on our eval of the moment, or dimensions that have the value for us over and over? Well, that's why, it's different strokes for different folks. That's what I'm going to tell you. And it's up to you to figure out what's the most important thing to you that you're comfortable with your risk model. It's not for me to say you should all be trading off a 15-minute chart, you should all be trading off a 3-minute chart, you should all be trading off a 1-minute chart. It's not for me to tell you that. Okay? I would be doing you a disservice if I did that, because that's not going to feel, not every trader is going to be comfortable with that. My job is to say, these are the rules you must adhere to, as Barbara Cohen has designed and back-tested over the years. This is her, this is her wealth of knowledge and information she's giving you. She knows what works. She's seen it all. She's done it all. And she said, this is the bottom line. These are the most important factors you need to think with. But she's also gone one step further and said, look, she's created sexy little proprietary additions to some of these generic indicators, and she said, look, if by using this and this together, you can trade this way and use that as your trading model. Or if you use this and this working together, you can trade that way and use that as your trading model. So that's why we have the different strategies of the trend, the counter trend, and the reversal strategy. And then after creating all those indicators, she then simplified it all and said, well, now you can just use a Segredo and that'll help you with your timing if you're still confused. So, you know, I like to use the best of both worlds because there are some very nice indicators that Barbara's created that I think are very useful, like her pivots, you know, the color change features, the fractals. These are great support and resistance information that are in addition to, and then having that simplistic view of the Segredo to see the trend, I think is very helpful so that you don't get confused with all the indicators. Good. So let me see a couple more questions here. I joined late. Were there any announcements? Yes. All the announcements that from now on in every class, I'm going to make the announcements at the beginning and the announcements at the end of the class. So you have to wait till the end of the class to hear the announcements. Okay? And you can ask any questions about fixing things at the end of the class. All right, so moving on. Let's see if we can grab a trade here. I want to see if I can give you a real-time example. I like to do those. And next week I'm going to do a little replay as well because, like I said, from next week I'm going to start a new series of classes. I'm going to walk you through different steps to help you really connect those dots and establish that focus you're looking for. So we're looking at the gold market here for a second because the euro is kind of fizzled out. It's moving too slowly. Somebody said the Russell was also moving. Looks like gold's starting to flatten out as well, though. That's the unfortunate thing about the afternoon. Let me just see here. You know, they all did their action this morning. It's been a very range bound though. If you look at gold, it's been pretty much range bound for the last late morning into the afternoon. Can we look at 2 p.m. trading today? Yeah, we can absolutely. 2 o'clock reversals coming in about 10 minutes, 14 minutes. So we'll definitely see if we can catch it. And I'll tell you, a nice market to catch it on is probably going to be gold, crude oil, and the Russell. The currencies don't tend to respond as fast to the fundamental moves because they're a little slow. They'll do it, but they won't respond as quickly. But something like the Russell, the TF, gold, crude oil, these kinds of markets will definitely respond very quickly to the 2 o'clock reversal. It's lunchtime now, so this is why the market's kind of slow, and that's why I'm going to move my class to the 2 p.m. time zone. Also, you know, I kind of use this time to answer a lot of questions and get the concepts across while we wait for the move. So we'll see here, we may have a counter trend short for the reversal, or we could continue the trend higher. But very nice trade here, crossing the 200, breaking clear. Now the only thing about Russells, we can't give you the pivots, as you all know, and if you're new with us, you don't know that. We can give you the pivots for any other market except the Russell, because when ICE took over the Russell, they basically won't give us the settlement. They won't give any third-party vendor, I should say, the settlement information to be able to create the pivots with. I'll cover those questions about schedules and events at the end of the class. GC only 100 tick moves today because it moved 450 ticks Tuesday and Wednesday. Yeah, gold was definitely moving this week. Looks like we got a nice number 2 coming in on gold. I'm going to go back there. So we could have, and look at this nice trajectory here. Now the other thing you want to look for, there it is, it's coming in, price action starting to come in here. Notice here on your 5 minute you got a number 1 with the yellow coming in. It's matching your your 1 minute, and let me just quickly grab the Segredo table to see if we have a buy. Don't know if the buy came in yet. We do have a long on cycle 1 on the mirror, but the mirror, I don't know if the buy was there, because what will happen with the mirror signals, it will flash and then disappear on you. If I look at the 3 minute, the only thing about the 3 minute, can you see the 3 minutes still giving me Christmas? Hasn't turned to green on green. So telling me in a medium range, you know, we having some issue there. So I'm going to be, let me just crop this here, and we'll see if we get a buy signal here. We do have a green candle on the 50 minutes, so it's possible that a trend could be starting. The only problem we have on this is that we're kind of at the end of the end of the end of things. So this could be sort of that last, you know, ditch effort. I call it the last beer drinkers before we go home story, you know, because as you can see based on the short-term trend line, your HMA is red on the 50-minute chart, and your 13 is pretty much flattening out. So you get this last bit of momentum coming, but again, there's no follow through. There's no follow through. So let's take a look at what our 15 minutes says here. If you see when you play with the zoom factor, if your charting gets messed up, then what I do is I either reload it or I just hit the different zoom tabs until the chart corrects itself. There you go. And it looks like that it's starting to change to green on the downtrend here. But it's not strong enough. It's not a green bar with a green number. It's a blue bar. So what that tells me is that if it's just a green number on the 15-minute chart, this is very important. If it's just a green number that doesn't match the bar, that means there's only a handful of traders. So what you're looking at on the lower time frame is a short-term move. It's a scalping opportunity. It's not a 20 to 40 tick run. You know, this is a 3-ticker opportunity or a 6-ticker opportunity. Maybe because it's gold, you might even get 10 ticks or something out of it. But that's what that green number represents. The green number says there's some green price action there. And they've got a green bar, but notice that the HMA hasn't really crossed this 13 yet. Can you see that? So this is just some green trying to establish a new direction that's not really established yet. In regards to coordinating markets, do you ever use or look at the DX on Ninja or the Quant to confirm move on gold, the dollar index? You can. Like I said, there's so many tricks that we've given you. Barbara does do that, and she's done it in the chat room. There's lots of little tricks that you can do, and she has created for you a correlated market PDF, which is in the members download section. If you go in there, you click on correlated markets, that PDF. She lists which markets work together. So like I said, I can't cover everything in every class, so I try to just hone in on specific topics. We'll see here with the let's do this. I'm going to let me remove some of these charts here because we've got 5 minutes and then we've got the 2 o'clock reversal here. So what I'm going to do is oh, see there gold, the buy is finally coming in on the gold here. I'm going to line up the 2 o'clock reversal for you on a couple markets so you can see the difference. So the buy just flashed here on the mirror saying we have another buy opportunity, and we'll monitor that for just a second. So you can actually use your timing of your buy signals and your sell signals along with the alignment of certain time frames, matching colors, matching trend lines, to help you establish a more focus and focusing on the real importances versus looking at every rule and every indicator. And that's really the main message that I wanted to tie from last week and this week. Last week we talked about workspaces, setting up different charts. And as you can see, I have a lot of charts up here. You don't have to have all these charts. You can simplify your view by just having two charts. You can have a 1 minute and a 3 minute combination, or a 1 minute and a 5 minute combination with your mirror. You can combine a ninja with a Segredo and your mirror. See, your mirror is giving you a buy opportunity, your 5 minutes confirming your medium trend view, and your 1 minute saying you can see where your support and resistance lies. Okay, now we've finally broken through the resistance of the moving averages. Now we're in clear sailing zone. Could we go all the way up to the fractal? You know, that's what we'll be looking at. So less is really more. That is correct, Rudy. Less is really more. So even though I have a lot of charts up because I'm cross viewing and I'm giving you different examples, doesn't mean that that's what you need to do in order to trade. Just showing you your alternatives. The other thing you can do, if you have a bigger more money to trade with, you can trade with a 15 minute and a 5 minute or a 3 minute. So you can get rid of the noisy one. Forget the 1 minute chart. Forget all that chop. Forget, you know, just trade the 15 minute using a 5 or a 3 and your Segredo. And when you see the buy come in on the lower time frames, you know, oh, we're going green, time to get in nice and early, and pretty soon I'll be profitable. So you could do something like that too. But we're now at the S3. No, we're not at the S3. We're in gold. I don't know what market you're looking at. We're at the we're going towards the previous close of yesterday, and then we're going to the R4. The S3 is down here at the PP. Would you trade gold long right now? No, I wouldn't trade long right now because I don't like this information. See this HMA being red? And with this 13 narrowing the gap, look at our MACD is above the center line, looking to flatten out. If momentum comes in and suddenly spikes, I wouldn't, you know, if I had got in earlier based on when the Segredo gave me that first number one back here, maybe I would have traded that and scalped a few ticks. But now you can see your 1 minute's already showing you the early change. So my 15 minute is not a perfect alignment. Can you see the Segredo is showing you it's a blue bar with a green number that says Christmas. This HMA hasn't crossed this. So what I like to encourage, if you are going to trade the 15-minute chart, it's almost better that you wait for the 15 minutes to give you a number two. Let me take it back here and show you a couple of things. Sometimes between the, let me just get rid of this toolbar because this is annoying. Sometimes this is important, especially if you're looking for less noise and more of a clear direction. When it's the end of something of a previous direction, okay, you're going to get a lot of transitionals because the new direction is developing. So in other words, what's going to happen is this could be a red number two, then it becomes a green number two, then it becomes Christmas with a red number with a green bar. It can flash different colors through the chain while it's trying to make that transition. So sometimes you want to wait a bar later to see if it's really going to hold true. And we're in that transitional stage. You see, look at the candles becoming small here. It's not a solid direction yet. There's too much conflict. Now it's a green bar with a green HMA. But the fact that this is not in sync, it's not green on green, we don't have the matchy alignment we're looking for to say this is really direction. See, on this number one, look here, the HMA has crossed the gray line already, and you'll see at the bottom here we have the yellow with the green color that we need. So I would be looking to trade between a 1 and a 2. If I'm not sure what one's going to be, what it's going to solidify as or close out as, I wait for number 2 on the 50-minute chart. And what's really nice about the 50-minute chart is if you add the 5-minute combo, it helps you to see what's going on inside that 15-minute candle that's taking so long to develop. So if you look at the 5-minute from this perspective, you can see we started out green, but look, the 5-minute is showing you that we have our Christmas candle. We're not holding true. We have a Christmas candle here. Now we're coming back down. So now the 50-minute is turning to a red number 1. So when you don't see that things are, and also we're right before 2 o'clock. So let's see 2 o'clock here. And let me just quickly change this to the Russell. I've got another chart here so we can see what the Russell's going to do as well. See if I have enough space for all of this. Just going to move this over a little bit. See, and now we've got a green number 2 with a blue bar. So we don't have anything significant just yet. Is NG dead by 2 p.m.? It tends to fizzle. You're really pushing your luck if you're going to trade NG in the afternoon. It's really just the morning market. Remember, there's not a lot of volume in NG. So sometimes you'll think something looks like it's going to go and then it just fizzles out on you. So you want to be careful. It's not as high volume as something like gold or crude oil. At least gold, you've got the volume in your favor. You can get in on some of those maybe, will it or will it, and sometimes the volume can see it through, can work in your favor sometimes just because of the volume is there. So the 15 disqualified the trade because of the HMA. My thoughts as well. Exactly. The 50-minute disqualified the lower time frame trades. Can you see that? So even though you can use this cross view for time frames to verify entries. So if you're looking at your 1 minute, you say, oh, I got a green on green, number 1, da da da, and you look over here and you see, oh, this is the blue. You go, well, the 15 hasn't decided, does it want to go short yet? If it is decided to go short, we'll have a red number, but it hasn't decided that. And it hasn't decided to go long either, because if we were long, we'd have a yellow or a green bar there. So because there's no decision on the 50-minute, we're in a no trading zone. So it doesn't matter what your 1 minute's giving you. Whether it's green on green or red on red, it's a no trade zone. So I'll tell you, one of the real advantages of Segredo, if anything else, it helps to keep you out of trades, because it tells you when things are out of sync with the color combinations, so that you're not following a trajectory like our good friend earlier with his wonderful example that he sent me. I mean, something like he said, my Linrig 4 had turned up. These are the kinds of things that happen when you're just trading with certain sets of rules. You can always get faked out. And the Segredo helps you to avoid that, because you go, well, yes, I got a red candle, I got a green candle, but You know, this over here is not confirming. That is one of the most important things. Yeah, so even at $100 a month, I'll tell you right now, if it saves me from losing $500 this week, it's money well spent. And that's that you always got to manage your losses as well as you managing your wins. It's a very important part of trading. You don't want to stay out of everything because you're the nervous hesitant guy, you know, but at the same token, you want to be able to say, no, I'm definitely staying out of this one. So as you can see now we've got a red number with a, and there's the sell. Now gold's giving us a sell. So aren't we glad we didn't go long? And now it's coming strong because here's our 2 o'clock reversal kicking in. It's a little laggy today. Sometimes it's, I think volume's a little fizzled out, and looks like our Russell's going to come down too. There's our Russell. So now there comes the momentum. So the lower time frame gives you the exact timing of entry on the very first bar, so that you're nice and early, you're not too late to the party. And then the higher time frame gives you the overall direction. You know, a lot of people, I get emails like this, and this is because you haven't attended enough of my classes yet. You come from the old school training. A lot of people are taught in the trading world that your 1 minute is your leading chart and your 15-minute is your lagging chart. And if you notice, in highlighting the same importance thing, if you notice that my 15-minute is on the left side of my screen and my 1 minute is on the right side of my screen. And there's a reason for that, because in the world of importances, we always read in the Western world left to right. So the left side, in theory, is more important than the right side. So I use my 15-minute to drive the direction, and I use my right side of the screen to get my timing down to a science. So I'm not getting in at the wrong side of the 15-minute candle. Now, if you notice, we've got some whipsaw here because you know, we're hitting support here. We've got the support fractals. It's not a very, very strong direction today. You can see how gold's kind of flattened out. So, and that happens on some days. It's not, 2 o'clock is not as strong as other days. Now in the Russell, we've got, you know, we still got the nice direction short, so the reversal is definitely short today. Gold should be coming in, but they've got some support in the way. Now we're looking at the 50 there. That could bounce there too. Let's look at crude oil and see if crude oil is also coming short. There's a nice short on crude oil. So also stuck on some support there with the S2, so they came with momentum. But when I see this, I see lots of chop like this. It's not as strong as the other. I mean, last week we had a very nice 2 o'clock reversal. Let's see what yesterday's look like. Oh, just it went up from the down. See, 2 o'clock, reverse. So it doesn't always mean it's going to be a 40 tick move, but it will give you a strong, significant change in direction. There's your change, 2 o'clock. Now, if you see, this is the other thing about reversals. If you see that the market is going sideways prior to the reversal compared to this one yesterday, which was a definite down and a definite up change to go up. Sorry. A definite down, definite change to go up. So as opposed to this, where you get the nice V factor, the nice change, sometimes you're going to get a sideways market. Now, just because it's sideways, it's still called a reversal because when the 2 o'clock hits, the direction is established. So when it's a sideways market, know that it could go up or down. So sometimes it's nice to have more than one market up to see which one is kicking in first, because then it'll kind of give you a heads up as to where that direction is going to go if the market you're looking at happens to be in a sideways zone. So the Russell clearly was showing down, so we were able to surmise, being a correlated market, that the crude oil was likely to go down, and gold is also going down. It's just there's just too much support in the way, so it's having some whipsaw along the way. And some markets are going to be very, very clean, and sometimes it's going to be a bumpy ride. See, look how flat. See it try to go down, but look at the moving averages. It's merging into a fist. There's the down move, but the moving averages are too clustered. There's no real trend. Let's go to the euro and see what the euro looked like. So you have to, even though price action is establishing a direction, if the trend lines are not confirming, are not established also, what's going to happen is your moves are going to be short-lived. So that's why we have to have the trend line information there. If the trend line supports the price action, then your move's going to be really strong. Sorry. So here you can see the currency started to go down, and it's really just fizzled because there's all dojis here. Nothing really happening in currency at 2 o'clock in the afternoon. But the thing to look for the currencies is that 10 o'clock. The 10 o'clock in the currencies, that morning market, is going to be a lot stronger than your 2 o'clock. A lot stronger. But you know, some days you'll still get a nice move regardless. Very helpful, thanks. Excellent. So very, very important to, and again, if we let's look at yesterday at 2 o'clock with the currencies. Where were we? That's today. Okay, so yesterday, again, lots of dojis, you know, because the euro market has really it took a beating this summer, really took a beating. And it's really just a morning market, as you can see here. Yesterday was another run to the R4 story. The nice thing about the currencies is why I like them as a trend trader is once they decide the direction, once you know the direction, it's like a home run. It goes right out the park. You know, it just keeps going and going and going and going. If you just stay the course, you're going to make some money. But don't try to counter trend this now. Don't try to say, oh, you know, it's time to come back down, because that's when you get into trouble. So never counter the trend in currencies. If you want to do some counter trend trading, go to gold, because at least it's going to give you enough volume that the chances are, even if you get the direction wrong, you're likely to get 3 ticks. Just because there's so much volume. So you can see, look at the counter trends, and this is a 3-minute chart on your gold. You know, the counter trends are just as big as the trends. They're almost equal in price action, which is not the same in the currencies. So counter trending in markets like NG and currencies is a very bad idea. The only time you should be counter trending is if you know that it's a reversal. It's time to change direction. Would you clear trade gold? You know, I have done clear trades in gold, and you can do them. The only problem with gold that I find is the only time you can really do a clear trade is trading the 13 EMA crosses, like the beginning of something. Because what happens is, if you notice, can you see all the clear trades? Let me just remove this, and you'll see what I'm talking about. If you notice that when they start their trend, and I found this, look at the huge bars. They suddenly burst out of nowhere. Like you'll be sitting on this candle going, this is what it will look like. You'll sit there and you'll go, are we coming down? Are they gonna bounce on support? And then boom, out of nowhere, they start the trend, and you can't even catch it. And if you do try to catch it by clicking a market order, you end up at the high of the stupid bar, and then only to, it drops as hard and as fast as it went up, only to get stopped out. So that's the problem with trend trading in markets like crude oil and gold. It's not that you can't, it's just that this timing is an issue. You gotta get in gold here and almost predict the trend. You gotta say, I think it's gonna go up, and ride the trend. But you can't jump in and try to catch these breakouts. It just won't happen. And you won't get filled, and B, you'll get in at the high of the candle, which is why counter trend, it makes more sense to counter trend, which is what Barbara does, because what she does is what's called the HFT fade. This is your HFT bar. It comes in, and then as soon as she sees the HFT bar comes in, she fades it. So she trades this part here. And she knows it's coming because she sees that the HFT, she knows it's going to fade. So, and there's an indicator that she created called the HFT fade. You can add it to your chart. Remember, there's also other templates you can use in here as well that she's created, like the ST chat room and stuff, which have those extra indicators. Now you can start playing with some of the arrows that she's created to help you see some of these things when they come in. If you go on your list here, let me see if I can add it. There it is, STHFT and HFT fade, and they also have audios, I think, with them as well. So now if you want to focus in on the counter trend, look, HFT bar, there comes the triangle, HFT fade. Now it's time to do your counter trend. But the thing about arrows is it's never 100%, because look, if you had taken this arrow, you would have taken some heat. So you got to go arrow plus something else to confirm your entry. You wouldn't take this arrow because it's still going through the MACD center line, stows are just crossing, but maybe you take this arrow because HMA's change color, so it's arrow plus HMA plus 3 stows are clustered together, have crossed the overbought line. You see what I'm saying? So it's an alignment, it's not strictly a rule or an indicator, which is why I like to teach people the strategies first, the alignments, and then say, now go add arrows to be your additional friendly reminders to say, this could be it. I was wondering what those arrows are on my charts. Now you know. Would you clear? Okay. If it's reversing, then it's a trend change in the other direction, yes? Correct. You only have really, let's put it this way, if you go to section 5 in the self-paced course and you read the chapter called Putting It All Together, you will see that there's different patterns within the algorithm of the market, like candle patterns, like double tops, double bottoms. You will see there's patterns with trend lines, like the trend trade and the gap trade. So we have different strategies, or things like when the 100 crosses the 200, that's a strategy. And we call those strategies. They're really self-organizing patterns that repeat themselves. But with that being said, you can also pick and choose which patterns you want to trade based on different alignments. So whether you use the Segredo and the Ninja chart to help you see the timing, looks like we may bust out long finally here. Got to decide, it looks like a mirror's giving us all bye, bye, bye. Or, so when that all comes in as an alignment, or when you see a certain pattern show up, like a cross of a trend line, or, a bounce of a support point. It's an arrow plus an HMA plus a stow. So you have to, by fine-tuning your focus, you have to decide what it is you want to look for that you like, and go back test it on the replay enough times till you feel comfortable with it, trade it for a week or two on the simulator, and then go live with it with one contract and build it slowly. So here's what I'm going to recommend that you do. If you have the Sagrada, pull that up, decide whether you want to be the 1 minute and the 3 minute trader, or you want to be the 15 minute and the 5 minute trader. Decide which time frame you're going to play with. Don't try to trade everything, because it's just too much information for your brain to process. Simplify it, undercut it, and then do this. Pick a market. Okay, you can add the Sagrada factor in just a second. Download the replay for the day and go back and say, how many times did my pattern show up? If I'm the person that's going to do the HFT fade with the arrow, right, matching my stow combo, go and see how many times my pattern showed up. Now this is a three minute chart. So here's my arrow here. If I change this to a 1 minute chart, probably going to get a few more trades. So the time frame also tells you how many entries. So if you only want to do the arrow with the stow combo and take 3 ticks on it, maybe you want to do it on a 1 minute chart so you get many choices. See, here's one, here's one, here's one, here's one. There's many choices for you to choose, and then go trade them all and see how many times you get your 3 ticks. And then you figure out, well, it didn't work here because, I took the arrow without waiting for the HMA color change. But if I take the arrow with the HMA color change, plus my stows are in the right place, they're at oversold, it's going to work. If I just go for 3 ticks, it always works. Now you have a formula. Now you have a focus. And then when you add the Sagrada in, that keeps you out of trouble. When it says, no, we're definitely out of sync, or we're definitely green on green or yellow with green numbers, then now you're going to take the arrows that are correct. So do you see how we're establishing more of a focus, and we're not just trading rules. We're learning the rules of what works well together, and we're saying, I like that formula, I'm going to trade that, I'm going to see, and I'm going to back test it to see if I'm really comfortable with it. Have I got it down to a science? Have I ironed out the kinks? Have I figured out which one really works well? And what am I using as my verification? And now I have a formula. I'm going to go trade that for a while until I double my account, and then maybe I'll go trade something else. You're going to get bored of this after a while. Does that make sense? Okay, so we're coming to the end of the class. Have to lose to tonight's class. So tonight's class is at 7 p.m. guys. Starting next week, I just want to quickly mention there's a schedule change. There are some other things coming out for you guys. Like I said, Shadow Traders is restructuring some things. So thank you for your patience and all your emails. And like I said, we are going to help you guys in the last quarter. We'll probably bring out another event. But for right now, what we're looking to do is bring back the 2 classes, because we've got a lot of emails requesting that. And so, but I'm moving my 12:30 class to 2 p.m. so I can accommodate other people in other time zones, get more people there. So every Thursday it's going to be the same information at 2 p.m. and 7 p.m. The 7:30 class is moved to 7 p.m. so that way we don't run too late. So 2 p.m. Eastern Standard Time every Thursday, and 7 p.m. every Thursday for now. And from next week, I'm starting a new series of classes. So if you want to get in at the beginning, make sure you come to at least one of them each week so you connect all the dots. This week was really about establishing a focus, giving you ideas about workspace, giving you ideas about combinations of indicators. And I'm going to repeat the information tonight. And also, I'd like you to send me emails on feedback on what it is you would like to see. Things like what type of event you would like. Would you like a 4-day boot camp during the week? Would you like maybe advanced trading techniques instead of a boot camp about revising basic stuff. Maybe you want just advanced trading with Sugreta showing you Forex and stocks. Give us some feedback. Give us some ideas of what you would like to see, and we can structure an event around that. You know, we can make it maybe a Sunday and a Monday, so you see a real market, or Sunday, Monday, Tuesday, or we haven't decided, and so I would like your feedback on what it is you guys would like to see, and how help me help you. How can I help you? Also, I talked a little bit about the possibility of starting some sort of coaching class that people, there'll be a small fee for it, maybe a monthly, 3-month deal. You do it for 3 months, because I don't believe that I can really coach somebody in an hour, charge them $75 and fix them. I just don't see how that's even viable. So I'd rather charge, let's say, $30 for a month, and give you a series of steps to follow that you check off. You check all the boxes, and do it for 3 months. So in one coaching session in an hour, you follow a program for 3 months, and you actually make some real progress. So you're not just hacking in the jungle, suffering through trial and error, but you're following a set program, saying, I'm going to commit to this program, try it this way, and maybe the next 3 months I'm going to commit to a different way, and see which one worked best for me. So that's another option, and so I'd like feedback on that, if you think that's viable, and that's workable for you, something that you'd be interested. Would you coach with live market conditions? Yes, could do a special coaching class aside from the regular classes, and only the people who sign up for the 3 months, program or something at $30 a month. It's like something simple like that. That could, like I said, this is all just ideas, guys. This is what we're going to do. I don't have the power to make that kind of decision, but I just want your feedback to see if you think that would be something you're interested in, and I, definitely working on some program ideas of what I think to help traders establish more of a focus, so we're not experiencing death by 1,000 cuts, blowing up accounts, hacking in the jungle, trying to remember all the rules, and so on and so on and so on. Will it be recorded? Well, the problem with recordings, everybody asks me about recording things. I can definitely make certain videos for the program. Like, I can give you a link to go watch a video for a specific project, and say, okay, when you've done this exercise, now for the next 2 days, do that exercise. The problem with video in a class is that it's a 2-hour class, and it's too big of a file to send over the internet. So it's not that simple. And then, after